Joining us right now to talk about policy ahead of the November election is Jason Furman. He is Harvard Kennedy School professor and former CEA chair. And Jason, let's just talk about what the Fed's move actually does signal, what it indicates, because it's been pretty confusing to be watching this saying, OK, when Chairman Powell came out and said the economy's in great shape, the jobs market is still strong, but we're going to cut 50 basis points. Why do you think that is? Does the Fed see something happening, whether that be in commercial real estate loans, whether it be something in the job market that concerns it? Why cut 50 basis points if everything's great?
Look, I would have cut by 25 basis points. I don't think it's a big deal. I think it was a close call. The cut was 3 steps progress. Inflation's come down a lot, but 1 step moving in the opposite direction in the job market with the unemployment rate up. I don't think the Fed has some secret information about economic weakness we don't have, but they're a little bit nervous about the unemployment rate going up. I'm a little bit nervous about it, too, just not quite as nervous as 50 basis points.
I think satisfaction thinking inflation has been tamed is one thing, and we certainly have seen some better numbers and some improvement. But if you look on the horizon at the potential for strikes at the ports, for the strike at Boeing, some other things that could go wrong along the way, that could lead you to think that inflation could come back in some way, shape, or form.
Oh, absolutely. Look, I think inflation's running at about 2.5%. And that's why the Fed is still keeping interest rates at a contractionary stance. The loose labor market will continue to put some downward pressure on that inflation. But yeah, there's a risk. In fact, if you look at wage growth right now looks like what you'd see in a 3.5% inflation world. So there are definitely still risks to the soft landing, both from resurgent inflation and from recession. It's just that the balance of those risks have changed, and the inflation one's gone down, the recession one's gone up, so rates should come down.
It just would be pretty disconcerting if the Fed had to turn around and focus more on the inflationary side of the ledger of the dual mandate at this point, rather than watching labor market if something happens in the next few months.
But that's why they've moved so gradually. I mean, that's the nice thing. If they made a mistake and did too much, they just need to not cut at the next meeting or not cut at the meeting after. They're not in a position where they're going to need to reverse this because rates are still contractionary. They're still going to be contractionary for a while. You know, I don't necessarily sure that it's the best way for the Fed to operate, but they operate with this gradualism. So they only move when they're overwhelmingly sure they should move. And even this is still not getting to where you'd want rates to be this minute. If you wanted to constantly have them in the right place, it's part of a path that they're going to go gradually on, and they can adjust.
I think that's probably why some people were in the 25 basis point camps, including yourself. It's what you would have done, too. Why don't we switch and talk a little bit about the election and what is potentially out there from each of the candidates? You had an op-ed earlier this week where you said basically both these candidates have crazy economic plans that have economists kind of ripping their hair out trying to figure out what to make of this. But you said Kamala Harris is the safer choice. Why don't we start with the economic plans we've seen from each of them so far? What's your favorite part?
My favorite, look, there's things she has that I like. An expanded child tax credit. That's something J.D.
No, I'm sorry, for each of them. Why don't we? I was being a little sarcastic. Why don't we talk about the crazy things in both of these plans that drive you nuts first?
Sure. I mean, you know, it's not going to tank our economy, but the idea that you might try to block a Japanese steel company from investing and helping support the growth of American steel production is just completely nuts. Saying tax-free tips, tax-free this, tax-free that, I think is pretty nuts. The idea that price gouging is right now keeping grocery prices higher, and there's something we can do about it, I don't think is understanding the economy. So there's a lot of things out there that, you know, I'm not loving what I'm hearing.
What do you like the most about, why do you say Harris is the safer plan?
Look, there's 3 big ones for me, and it's the question of what you want to do and what you're able to do. First, trade. This administration did a bit more tariffs than I would have liked, although there was some theory and argument for them. 10 or 20% across the board tariffs, tariffs on allies like Australia, tariffs on products like ballpoint pens that we don't make. That's just a global trade war in the making. It's something Donald Trump could do all on his own without Congress. So that's number one. Number two, on the budget, I don't think anyone's taking it as seriously as they should, but pretty much every independent rack-up of the two says Donald Trump would add much more to the deficit. I total more than $5 trillion from him and from Harris, depending on what she does, either some deficit reduction or $1.5 trillion of increase. And by the way, if he's elected, he will probably have a Republican Congress and can get it done. Finally, there's the Fed. His threats to the Fed are just awful. I don't think he could pull them off, but I'd rather not take the chance.
Some of those markups include her ability to raise taxes by $5 trillion, and that probably wouldn't happen either, Jason. I read, I don't know, you had a good piece in the Journal. John Paulson.
You can stop there.
Yeah, John Paulson. I could, if he were here, he would. He makes an interesting case for targeted tariffs, and Biden did leave some on. And you're right, ballpoint pens, I don't know about that, but like the defense industry, in general, we average about 2% on imported industrial, a tariff of 2%, and it's just much higher from everyone else. We are definitely
not everyone else. Most of the advanced economies have pretty similar tariffs with us. These are our close allies. We're going to put a 20% tariff.
I don't know about 20, but
Australia,
okay, how would you?
Canada?
In 2022, we had a record for the trade deficit, 1.2 trillion, and then we had a 1 month record just in July of 103 billion. There is a problem.
But tariffs won't do anything about it. First of all, we'll do tariffs on them. They'll do tariffs on us, plus the exchange rate will adjust. Statistically, there is no relationship whatsoever between the level of tariffs and the trade deficit. What tariffs affect is the volume of trade. So we'll end up with less imports, which hurts our consumers, and we'll end up with less exports, which hurts our workers in those industries. So it just shrinks all of this trade, isn't going to rebalance it.
It must be hard for you because it's neither
to be in favor of free trade. That's pretty.
No, I know. But it's almost like there's actually a neo free trade group that are like libertarian. It's very strange. Both sides have some strange hybrid ideas. Now Trump wants to get rid of the salt cap. So I mean, there's crazy stuff going on. And I don't know how many trillions that would be. You'd probably like it. I don't know what Massachusetts is.
No. I would keep the salt cap that was done in the reform. I think the structure of the 2017 reform was actually quite good and thoughtful.
Right, getting rid of all those.
Couldn't afford getting the rates down quite as far as they lowered them.